Welcome to another Jarvis video series. In this video, we're going to be going into more of a deeper dive with PTCs. There's going to be a lot more videos like this, guys, right? There's about 150 plus decision points in Jarvis, which probably makes it probably one of the most intelligent protocols out there in TradingView, to be honest with you. Definitely in the top 0.01% in our opinion, quite frankly. We have some biases, obviously, but this system is kick-ass. So let's talk about these PTCs, right? So it's a little bit more of a deeper dive. Um, so as you can see here, there was a sell signal, which is this is currently live, guys. This is actually happening live right now. MNQ. This is not a replay. This is not back testing. This is a live chart happening right now as we speak. And there was a sell signal that fired off at 7:46 p.m. This was, as you know, it was a code blue signal. I want you guys to start understanding the terminologies of Jarvis, because once you wear the suit and you put it on, you have to understand these terminologies so you know how to maneuver in the market, right? So this sell signal fired. It was a code blue signal, meaning there was opposition with this signal. But just because there's opposition doesn't mean that the structure can't be built out. It's just letting you know that, hey, right off the bat, on signal firing, it has some opposition. There was a soft signal E, which means that this particular candle was trying to break this structure, but Jarvis Intelligence said, well, it wasn't a real structure break. It wasn't a real change of character break here. So let's just kind of like press this signal down to keep it in this painting that is doing. Keep it within the signal. So it's going to stay in the cell. This was a C2 candle. This was a C3 candle. So remember, C1 technically is the signal. C2 is confirmation. C3 is confirmation. After confirmation, this HUD is supposed to update. The reason why this HUD didn't update is because this is a brand new key for this structure. When there's a brand new key, there is no statistics. If there's no statistics, Jarvis is not going to print anything in this HUD. That's basically letting you know, hey, trader, I don't have any statistics on this structure. Don't take the trade. From Jarvis' perspective, you don't take the trade. But here's the thing. Once you start to interact with Jarvis more and more and more and more, and start to understand these structures and how this thing is built out, you can still take this trade if you want. Okay? And there was ways that you could have done it, and I'm going to show you how. First, there was this A1 print. Okay? A1 means acceptance. This acceptance came after confirmation. This was a strong acceptance. Okay? If an A1 prints, it's a strong acceptance. If no A1 prints, then two things it is. Either the acceptance was rejected or it's a weak acceptance. This was a strong acceptance. So when a strong acceptance gets printed, the next candle, the next process is called audit. So it's acceptance, then audit. And then on audit, it's going to basically check to see how was the follow through on that acceptance. Based off of how this candle is looking and where it closed, and it closed red, it looks like, I'm going to say this was at least at minimum a week. This looks like a little bit straddled, but at the minimum it's weak. Um, if this key had samples, there would have already been data here. Jarvis does have intelligence on candles, bodies, and wicks, and dimensions, and weight, and all of that. But because Jarvis is off, you got to use your eyeballs, okay? And based off of my eye, this is like a doji, so it's kind of like an indecision. I'm gonna say it's weak. So strong acceptance with a weak follow through. Black candle, TP, okay? TP candle, TP. Currently, our journaling is on 1R, okay? It's 1R. Swing close for our smart stop loss. Um, so it hit TP. Now, I don't know where the stop loss is. I'm thinking if it's swing close, it probably use this guy here as a swing point. But it hit TP here. Okay. So down to the PTCs. These PTCs are great. If you look at this right now, it's still printing a PTC. Oop, I'm seeing a strong confirmation coming up here. So we'll see what happens there. But if you look at these, right, this is potential trend continuation. And what Jarvis does is it actually labels these potential trend continuation candles to let you know that there might be something here where this trend can continue. Okay, so the first print was here. That was at 8:02. So 7:46 p.m. 8:02. First print, PTC-A. There was a asterisk in an actual triangle. So what does that mean? That means that this asterisk for this PTC-A was part of a fair value gap, and you can see it here, here, and here. This particular candle is part of a fair value gap, but then there's an additional fair value gap up here somewhere as well. If this fair value gap was able to get mitigated within this first PTC-A, this dynamically gets updated. Okay, but if a new PTC prints before this gets mitigated, this stays frozen in time. So there's a good point about that, right? At least when you see PTC in the next PTC print, if you look up here and you still see this asterisk and this triangle, that means that this wasn't mitigated up here. That means that there's an imbalance up here, which means that what? The market's gonna have to come back up and fix this imbalance, right? This B printed, I can assure you when this printed, this also had a fair value gap, but as you can see, it's been mitigated. How was it mitigated? Take a look at how it happened. Market came down, popped up, came back down. Now, with PTCs, it's printing these labels, it's letting you know what the fair value gaps is. If the specific candle was part of a fair value gap, that's what the asterisk is for. It also grades, right? So in this telemetry alone, there's already 3-point intelligence already right in this label, right? Right on the candle. So now you ask yourself, well, how can I get into this trade? Because obviously you could have gotten here into it here if you wanted to, even with a no key information. This was a very good print in the structure birth. Okay, structure birth is up here. Now we're continuing on, right? So this is no longer a structure birth. It's building out. It's kind of like in the mid life cycle of the structure, right? So what do? You see this little green little circle here? This is your strong confirmation. Jarvis will print it for you. You ain't got to worry about it. But what you do after the strong confirmation is key. So always go with confirmation, acceptance, and or audit, and or commitment. What that means is when you're dealing with PTCs, you do commitment. I mean, you do structure rather. I'm sorry, structure. Confirmation first, then you do acceptance. Acceptance is 2 candles, A1 and A2. Okay. After that is audit. That's candle 3 and 4. So let's walk this through. Because this was a potential trend continuation, you're looking for strong confirmation. So here's your strong confirmation. Good. A1. Very good. Look at that. Strong confirmation, right? Came all the way down. It's a good candle. Look at A2. A2 closed back into this candle, but this did not reject this candle. So this, I would consider this a weak follow through. So strong confirmation first. A1 print, this is your acceptance candle, was strong. A2 was weak. So strong acceptance, weak follow through. Because this is a PTC-B, what this tells you is that if this does a weak follow through like this, that means if I'm going to do a limit order, I'm either going to do a limit at the open of this, maybe the close of this strong confirmation, or I can do it at the open as well. Okay. And as you can see, the market came up, bounce, boom, came down, bounce, boom, came down, kept coming down. Now, take a look at this one. PTC-C, C asterisk, another PTC. So that means when you start seeing PTCCs, that means that the structure is starting to weaken. It doesn't mean the first PTC you get is going to reverse, but you don't have to worry about that. You know why? Because Jarvis is going to be printing these strong confirmations for every PTC label that it finds when it finds it. Okay, if it doesn't find that strong confirmation, it doesn't do it. And I would suggest don't bother trying to figure it out on your own unless you're really good at it. So let Jarvis print the strong confirmation for you, and then what you do as a trader is manually check your A1 and A2 candles. So let's take a look at this for instance, right? This printed a strong confirmation on this PTC-C because when these PTCs are printing, right, it's also printing a rolling support and resistance. When it's A and B, you look for support. When it's C, you look for resistance. So technically, the resistance line is here. The market dipped below the resistance line and came up, right? Take a look at this buy that's starting to build here. You see that? Strong confirmation, right? A1, really good. A2, good. A3 is actually your buy signal. You see that? So technically, if you were going to enter, you could enter either here or here. Now, the reason why I would probably enter here is because this is a reversal. When it's a reversal, you need more support from the market confirming the expected outcome. Everything with the market and how you understand structure and how it builds out, it's like it's like an architect building a home, right? If the architect says it's going to build you an igloo, it needs to look like an igloo. It cannot look like a trailer home or a mobile home or a mansion. It needs to look like an igloo. That's the expected outcome, right? So if my expected outcome is a PTC-C, I'm expecting the market to reverse. That's what I want, right? I want it to reverse. So here we have it. There was a PTC. Well, obviously now this has disappeared. The reason why this has disappeared, guys, don't get scared. It's because we're on a new signal. Once a new signal prints and it's saved, the rest of the labels are removed to just help with performance of Jarvis, so it's not having all these hundreds of labels out there. But nevertheless, this was a PTC-C flow. This was a strong confirmation for the PTC. The resistance line was somewhere down here. A1 printed, A2 printed. This is your A3 candle. Okay? Now, when this happens, normally the market will come up, then it'll reverse, come down a little bit, then go up, right? So you could enter, this is your A3 candle, you could enter here on your A2 close, and then you can then use your stop loss, this candle or this candle. You could come down to this because technically this is the furthest, um, I would say, swing point that's protected. But when you do stop loss, always make sure that you go to the wick. And when you go to the wick, don't go directly under the wick like this. Give it about this much space in between, just in case, because sometimes you can get wicked out here, right? So you would either enter on your A2 candle, or you could enter A3 too, but I think A3 is a little too close to price because this is the current price where this is. It's a little too close. Come back a little bit, maybe A2 or A1. Close, or you can use the open as well if you like. And then just remember to use the proper stop loss. But from what I can see here, I believe there's a good kind of like reversal happening here, because this definitely here looks like a safe what is that, swing point. Okay, so there's the video there. This again is a long-winded video, but these type of videos is good to just kind of like sit back and just go through the process with, right? Trust me, there will be other shortened videos, guys. Okay, it's not going to be 15-20 minute long videos. It's going to get shortened, but I want you guys to really dig into this Jarvis and start to understand the mantra about it, so that when you put on the suit, you know exactly how to work it. um and then So yeah, then the next video I'll get into, like, when it comes to tap ins and how long you should wait for and stuff like that. We'll get into that. But for now, this was more about the PTCs. This was a really nice sell. Good short signal. Shout out to Jarvis for making that call. Obviously, now this has been journal, so don't worry, right? When this key is brand new, it doesn't have any information for the first time, it won't know. But the next time it finds this key, this fingerprint, it will display it. Now, the last I will leave with this is when it comes to these keys, there is a proprietary um, intelligence behind it where it has about 10 dimensions on this key, right? So it's very specific. This is not just a regular generic key because Jarvis wants to make sure that structures are wrapped around a nice, solid, unique fingerprint so that when that fingerprint comes back up again, it will be able to track it. Um, so yeah, you can see a cell coming back here already. This could be a cell that's going to kind of like come down a little bit and then there'll be another buy that'll pop back up, or there you go, it's another buy here. And as you can see, no keys. So it happens, guys, right? Especially if it's in an area or it's in a zone that it doesn't know too much about. Also to the sampling data, as you can see here, um, it's 284. It's kind of still kind of low. You want to try to get to like a good 300 to 400 samples. Here is when you start to see keys start to repeat itself, because the market does repeat itself, guys. Okay, I can tell you that. It definitely repeats these structures too. Um, so yeah, I feel like it's probably going to come down a little bit, bounce, but again, that's the reason why you see. I was telling you guys just now. This is real time. We're going through this. This is not replay, guys. This is definitely real time. You can see that there was a little bit of a buy that popped up a little bit, and it's kind of like in another sell signal comes through here, so there could be some retracement. That's the reason why you never want to just be right behind price. You want to be a little bit further back. So technically, you could have entered on your A2 candle here, A1, or better yet, even your strong confirmation, right? Because when you do that, what happens is that your stop loss gets a little bit tighter too, right? So you could have entered here, use this as your SL swing point, or use this guy. But I believe this is gonna head up. I mean, the only boundary right now is this PTR, which is about 477 bars old on the 2-minute chart, and then this EMA 200. Once it beats these 2 points, yeah, it's pretty much gonna go basically. All right, more videos to come.